Okay, well, it's good to be back here. We're in early September, 97 degrees outside, really warm. Just to give you an idea where and how things are going out there. Um, the reason why I bring that up is because we're coming up upon the deadlines. We're already deep into the third quarter, coming up on the year end. And in particular, there are two deadlines, one for September 15th and one for October 15th. And a lot of folks, a lot of our colleagues are focused on those deadlines, but not because they're being proactive, but because they're kind of cleaning up what happened in 2022. So, for example, the last time to file a tax return for a business entity that's on a calendar year for 2022 is September 15th. And then the last time to file a tax return on the individual basis is October 15th. But what we're doing in our client base is we're meeting with our clients for the third quarter because we've been getting together with them on a quarterly basis, taking a look at their numbers. And we're always looking at collections and cash basis, right? I know there's a lot of fancy accounting out there where you can do accrual and timing and all that other stuff. But if you're a small business owner, what you really want to focus on is cash coming in, cash going out, who do we owe, and who owes us. And especially in these high inflationary times, high interest rates. I was watching some media today where they're talking about the housing market and investors are kind of backing down now from buying single-family homes. I think the statistic was up until recently, a few months ago, investors made up about 75% of the single-family home purchases over the last 3 to 5 years. So where does that leave us? What should we be doing? Well, what you want to do is you want to realize that in order to save on taxes in particular, and the big issue with saving on taxes is it improves your cash flow, right? You don't want to be making hundreds or billions of dollars of donations to the IRS. If you accumulate all those small business deductions and all those small business tax payments, that's what it equates to, right? So what you want to be doing is you want to be meeting with someone quarterly. And when you meet with someone quarterly, you should be taking a look at current data, maybe perhaps even through this past August as we're in early September. And again, you want to look at the profitability of your company. You want to see what your revenues look like. You want to see what your expenses are. You want to see what your net profit is, because as a small business owner, most likely that closely held entity value is going to flow to you personally, and it's going to impact your bottom line in the form of a tax bill or a tax refund. And we're working in both worlds, right? The last thing you want to be doing is filing a tax return and expecting a huge refund, because that cash could be put together and could be used in your business right now. So we found in a study that we did over the years, we've been practicing now since 1999 publicly. Prior to that, I've been working in the tax compliance world and also as a CFO since the early 90s. What we found is almost 23 million plus businesses are not organized correctly from a tax efficiency point of view. Now, I'm not talking about from a legal point of view, asset protection and all that. Of course, that's always critical and that's always important. What I'm talking about is your company organized, your LLC, your corporation, your sole proprietorship, perhaps? Is that organized in the most tax efficient way? And what we do is we plan and model and optimize for our clients. We could optimize compensation for you as the founder. We could optimize the deductions. We could optimize the entity selection to see what makes sense for you. We're always intense about qualified business income, or QBI. We always take a look at that, even for property owners, right? If you have a functioning property management company, or you own a couple of properties and you have rents coming in, rents going out, even something like an Airbnb, you want to make sure that you're optimizing what's going on in your business. How do we do that? We always look at deductions. We look at the type of entity. We look at whether or not it should be an S Corp, for example. What are the secrets there? What's the secret sauce between those entity optimizations to get the best bang for your buck from a deduction point of view? We look at your current information. The only way to do that is to get together quarterly. And in many cases, sometimes monthly, right? We want to be having our fingers on the pulse of your business and what's going on. We want to be truly working with someone. We want to understand where your revenues are. We want to understand what your collections are. We want to understand on a cash basis how much money's coming in. We also want to look at, right, what your deductions are, what your deductions may be, especially now as we hit into the last 4 months of the year. Now is the time to optimize. We have a very good sense of how the year is going. We have a good sense of perhaps even how the year is going to close out. We don't want to be sitting here in January, February next year of saying we shoulda, woulda, coulda. No, we want to be proactive. You know, I have this picture, it's hard to visualize, but you've heard the expression, the tip of the iceberg. Well, the tip of the iceberg is what most business owners think they could save by doing tax advisory, which is getting together periodically, mostly quarterly, sometimes monthly. A lot of business owners say, well, here's the tip of the iceberg. But in reality, when you get together in a tax advisory, when someone's helping you manage the tax business itself for your company, what happens is you're seeing all of what's below the iceberg. You're seeing not only the tip of the iceberg, but all the other things. And that's really, truly what you could be saving as a business owner. So when you look at that, you need good numbers. You need some accounting. You need an online cloud-based system, most likely, so that you can look at that data from anywhere, so that your key members, you can look at key performance indicators. You might want to look at, depending upon the nature of your business, how many times your product is being serviced, how many times your product is being offered out to the marketplace, what the turnover is, what the churn rate is. I know churn's a negative word, especially in the financial world, but I'm talking about in your business. You want to make sure that you understand, are you retaining your clients? What's your attrition rate? What has happened? Do you have people who are pressing you for prices? What do your suppliers look like? Are you managing sub-accounts like sales tax when you're buying supplies? You know, what has happened is the government in all forms, federal, state, and local, they're looking for revenues. They're looking for sources to fund their projects. They're looking for sources to fund their operations. So now more than ever, you've heard the rhetoric in the media, in the national publications as well. They're coming at small business owners because it's the low-hanging fruit, right? So we want to take a look at things. Are you considering vehicle purchases? Do electric vehicles make sense for you? Are you considering solar for your business? Does that purchase make sense for you? Does putting a solar facility upon your commercial building make sense? What's the depreciation look like? When you buy a property and you put that property into service, that's the fancy technical word. Are you looking at the costs? We've talked about this before, cost segregation. We want to be able to segregate the major components of that property through an economic and financial study that also looks at the technical aspects of that property. And we want to make sure that we're capitalizing and shortening the depreciation period. Because when you shorten depreciation periods, you increase the deduction for depreciation. You therefore reduce the rental income. And again, by reducing your tax bill and rental income, you end up reducing and increasing you end up reducing your tax bill, but increasing your cash flow. Those are key critical components of what we do, but it has to be done proactively on an ongoing basis. Okay, I get it. Now you may be trying to clean up 2022. You might be scrambling. You might be gathering data. You might be gathering bank statements, and you might be able to try to put together a tax return between September 15th or October 15th and now. But you're really doing yourself a disservice. What you want to do is you want to be looking at 2023 and beyond. You want to be able to make sure that you're taking advantage of the most important deductions. You want to make sure that you're capturing your revenues correctly. You want to make sure that your cash coming in, cash going out is working for you so that you can, in fact, impact your tax liability, your tax bill at the end of the day. So those are the kinds of things we're looking at. And guess what? Once you handle your tax bill and you increase your cash flow, you can bring on better programs for your employees, for your team members, perhaps set up a retirement plan and the like. Now, remember, we're knowledge-based, right? We're not here offering retirement plans. We're not here offering insurances and selling products. What we're interested in is educating you as the business owner, making sure that you can get the best deductions for you, and also utilizing a lot of the different items out there, like retirement plans, to retain the best employees. We want to make sure as a member-owned company between you, perhaps and a spouse or partner, that you have the correct medical insurance deductions, perhaps setting up correct health reimbursement plans, perhaps setting up and optimizing the best way to capture all the business expenses, like your meals in your business. Remember, there's no entertainment. We're still operating, thankfully, under some pretty benign tax laws, right? We have a government that's separated a little bit on both sides from a tax point of view. I know many of you may say we're separated from a lot of ways, but from a tax point of view, we have two different groups out there. And right now, we're in a kind of a status quo as far as the tax law. And that's actually pretty good for businesses. So what has the government done is they've deployed assets out there to come and take a look and examine your business in the forms of audits. So I want to make sure your records are good. I want to make sure not only are records good for compliance, which is critically important. We're not talking about playing fast and loose here with compliance, but what we're talking about is being proactively compliant so that you can capture the best deductions for your business. So I know we keep emphasizing this time and time again, but it is critical. And you're going to see a lot of this coming up again in the next couple of months. One last thing, we've been talking to a lot of folks with research and development tax credits. Do you know research and development tax credits are the most underutilized tax credit for small businesses? Are you developing a new product? Are you developing a new service? We were talking to someone earlier who is developing a new set of hot sauces, believe it or not, right? And she has many different flavorings and things of that nature. Well, we're taking a look at the research and development tax credits in that context. We're also talking to someone who's developing flavored salt for your foods. We're taking a look at that as well. And some of the flavors actually have a spice to them. Last but not least, as you know, there are many different ways that alcohol is being conveyed today. There's many different ways that alcohol is being infused into many different products. Beer is the most obvious, so maybe there's microbrews out there that want to take advantage of recipes. Maybe there's vodkas, maybe there's seltzers, etc. There's a lot of places where research and development could go into product development. There's also a lot of places where research and development can go into service orientation. And that service doesn't always have to be oriented right out to the client. It could be something that improves your processes internally. So we'd love an opportunity to sit down and chat with you. We could do a presentation. We can give you a discovery and let you know how we can save you tens of thousands of dollars and maybe even more depending upon the size and scope of your business. It's a great opportunity right now to be proactive and to be able to not only look at the September 15th and October deadline of October 15th as a way to catch up for last year, but to get and hit the ground running. There's still time. We have almost 4 months in this year where we could address your 2023 tax bill and beyond and improve your cash flow, which is critical now in these inflationary times for small businesses. So again, good to be here. Good to talk to you. As always, thank you for your questions. If you have any questions, shoot us a comment. Tony Bruce, CPA, more than just an accountant. Thanks for your time.